The year was 2012. A Mexican drug cartel faced a problem, transforming millions of dollars in dirty money into legitimate assets. Their solution, a complex web of transactions designed to obscure the source of their ill-gotten gains. These deposits, carefully placed within HSBC, slipped under the radar. The money flowed through the global financial system, landing in Hong Kong, further distanced from its criminal origins. Investments in real estate, gold, and shell companies provided a veneer of legitimacy. Money laundering is a global epidemic, touching every corner of society. From tax evasion to human trafficking, it fuels criminal enterprises worldwide. The scale is staggering, with trillions laundered globally each year. In this series, we expose the methods, players, and impact of money laundering. Prepare to uncover the secrets of this invisible empire. Money laundering is the art of making dirty money appear clean. It integrates ill-gotten gains into the global financial system, making them indistinguishable from legitimate wealth. It fuels drug trafficking, terrorism, and corruption. Without laundering, criminals would struggle to operate. Understanding its mechanics is crucial to combating its influence. Criminals launder money to disguise its illicit origin, use it freely, and reinvest in further criminal activities. This process allows them to avoid detection and maintain a veneer of respectability. They can spend their profits without raising red flags. Reinvesting profits expands their operations and corrupts officials. Money laundering undermines the integrity of the global financial system. Money laundering unfolds in three stages: placement, layering, and integration. Placement introduces illicit funds into the financial system. Layering creates a complex web of transactions to obscure the money trail. Integration reintroduces laundered money into the legitimate economy. The criminal now enjoys their illicit gains without fear of detection. Smurfing involves dividing large sums into smaller deposits to avoid scrutiny. These deposits are spread across multiple accounts, often in different countries. Smurfs, often unwitting participants, make deposits for a fee. The dispersed nature of these transactions makes them difficult to track. Combating smurfing requires enhanced monitoring and stricter regulations. Casinos are ideal for blending dirty money with legitimate gambling proceeds. Criminals purchase chips with cash, gamble minimally, and cash out as winnings. Casinos also facilitate international fund transfers. Detecting money laundering in casinos is challenging due to high transaction volumes. Operators and regulators face a constant battle to prevent it. Cash-based businesses are prime targets for money launderers. Over-reporting income and under-reporting expenses help launder money. Stricter reporting requirements and regular audits can combat this. Educating business owners about money laundering risks is crucial. Regulatory oversight and law enforcement investigations are key. Trade-based money laundering exploits international trade complexities. Over-invoicing and under-invoicing move money across borders. Multiple invoicing creates a paper trail that obscures funds. Cooperation between customs, financial institutions, and law enforcement is essential. Stricter trade controls can make it harder for criminals to exploit the system. The digital revolution has enabled new forms of money laundering. Cryptocurrencies, online gaming, and e-commerce are tools for laundering. The decentralized nature of these platforms complicates detection. Law enforcement must evolve to keep pace with tech-savvy criminals. International cooperation and robust regulations are necessary. Cryptocurrencies offer anonymity and cross-border fund movement. Exchanges convert illicit funds into cryptocurrencies, obscuring their source. Mixers pool and redistribute cryptocurrencies, hiding their origin. Stricter know-your-customer regulations on exchanges are needed. Tools to track and trace cryptocurrency transactions are essential. NFTs and digital art create new money laundering opportunities. Illicit funds purchase NFTs at inflated prices, cleaning the money. NFTs can be resold or used as collateral, integrating laundered funds. Regulatory oversight and industry best practices are crucial. Educating collectors about money laundering risks is important. Section 4. Online gaming and streaming, from virtual worlds to real riches. Online gaming and streaming platforms, once seen as purely recreational activities, have become unexpected avenues for money laundering. The rise of in-game currencies, virtual items, and online tipping features has created new opportunities for criminals to cleanse their illicit proceeds. One common technique involves using illicit funds to purchase in-game currencies or virtual items, which can then be sold to other players for real-world money, effectively laundering the funds through the virtual economy. This process is often facilitated by third-party websites and black markets that operate outside the control of game developers. Another method involves using online streaming platforms such as Twitch or YouTube gaming to launder money through fraudulent donations or tips. Criminals can use stolen credit card information or other illicit funds to send large donations to streamers, who then transfer a portion of the money back to the criminal, minus a commission. Combating money laundering through online gaming and streaming platforms requires a collaborative effort between game developers, streaming platforms, payment processors, and law enforcement agencies. This includes implementing stricter account verification measures, monitoring in-game transactions for suspicious activity, and educating users about the risks of money laundering in virtual worlds. Section 5. AI, the automation of deception. Artificial intelligence, while holding immense promise for various industries, also presents new challenges in the fight against financial crime. Criminals are increasingly leveraging AI's capabilities to automate money laundering processes, making it even more difficult to detect and prevent. One concerning application of AI in money laundering is the creation of synthetic identities. Criminals can use AI algorithms to generate fake identities using stolen or fabricated personal information, opening bank accounts, obtaining credit cards, and conducting transactions without raising suspicion. AI is also being used to enhance traditional money laundering techniques. For instance, AI-powered systems can analyze vast amounts of financial data to identify patterns and anomalies that might indicate money laundering activities, making it easier for criminals to avoid detection. Combating AI-powered money laundering requires a proactive approach, focusing on developing and deploying countermeasures that can effectively detect and mitigate these evolving threats. This includes investing in AI-powered anti-money laundering solutions, enhancing data sharing and collaboration between financial institutions, and fostering research and development in AI risk management. Section 1. The gatekeepers of secrecy, banks and financial institutions. The global financial system, a complex network of banks, financial institutions, and payment processors, plays a pivotal role in facilitating the movement of money across borders. While the vast majority of transactions are legitimate, criminals exploit vulnerabilities in this system to launder their illicit proceeds, often with the unwitting or complicit assistance of those entrusted with safeguarding it. Banks, as gatekeepers of the financial system, are subject to strict anti-money laundering regulations. However, the sheer volume of transactions processed daily, coupled with the increasingly sophisticated tactics employed by criminals, makes it challenging to identify and prevent every instance of money laundering. In some cases, financial institutions have been found to be actively complicit in money laundering schemes, turning a blind eye to suspicious activities in pursuit of profits. These scandals, often involving billions of dollars in laundered funds, erode public trust in the financial system and underscore the need for greater accountability and oversight. Regulators and law enforcement agencies are stepping up efforts to combat money laundering within the financial sector, imposing hefty fines and pursuing criminal charges against individuals and institutions involved in these illicit activities. However, the fight against money laundering requires a continuous effort to stay ahead of criminals who constantly seek new ways to exploit the system. Section 2. Architects of Obfuscation, Lawyers and Accountants. The world of finance is built on a foundation of laws, regulations, and complex financial instruments. While these structures are essential for a functioning economy, they can also be exploited by criminals seeking to conceal their illicit activities. Lawyers and accountants with their specialized knowledge and expertise can play a critical role in facilitating money laundering, often operating in a legal gray area. Lawyers, for instance, can help criminals establish shell companies, trusts, and other legal entities that obscure the true ownership of assets and make it difficult to trace funds back to their illicit origins. They can also provide legal advice on how to structure transactions in a way that minimizes tax liabilities and avoids detection by authorities. Accountants, on the other hand, can help criminals create false financial records, manipulate accounting entries, and devise tax evasion schemes that conceal the true source of their income. They can also provide advice on how to move money through different jurisdictions and financial instruments to avoid detection. The involvement of lawyers and accountants in money laundering poses a significant challenge to law enforcement agencies, as it often requires specialized knowledge and expertise to unravel these complex schemes. Increased scrutiny of these professions, coupled with stricter regulations and ethical guidelines, is crucial to curbing their role in facilitating financial crime. Section 3. Corporate phantoms, shell companies, and tax havens. Shell companies, legal entities that exist solely on paper and have no real business operations, serve as a cornerstone of many money laundering schemes. These corporate phantoms, often registered in jurisdictions with lax transparency laws known as tax havens, provide a veil of anonymity that allows criminals to move and conceal their illicit proceeds with relative ease. Tax havens, typically small island nations or territories with secretive banking laws and low or non-existent tax rates, offer a safe haven for criminals seeking to shield their wealth from scrutiny by authorities in their home countries. These jurisdictions often lack the resources or political will to effectively combat money laundering, making them attractive destinations for those seeking to operate in the shadows. Shell companies registered in tax havens can be used to open bank accounts, purchase assets, and conduct transactions without revealing the true beneficial owners, making it incredibly difficult for law enforcement agencies to trace the flow of money. These entities can also be used to create complex ownership structures that further obfuscate the money trail and hinder investigations. The fight against the use of shell companies and tax havens in money laundering requires a concerted effort by governments, regulators, and international organizations to enhance financial transparency, strengthen anti-money laundering regulations, and promote information sharing between jurisdictions. Without a coordinated global response, these havens of secrecy will continue to undermine efforts to combat financial crime. Section 4. A global network of complicity. Money laundering is not a victimless crime. It fuels corruption, undermines the rule of law, and destabilizes economies, disproportionately impacting developing countries that often lack the resources to combat this pervasive threat. Addressing this global challenge requires a collective effort, one that transcends national borders and unites stakeholders from all sectors of society. Governments must strengthen their anti-money laundering laws, enhance interagency cooperation, and provide adequate resources to law enforcement agencies tasked with investigating and prosecuting financial crimes. International organizations, such as the Financial Action Task Force on Money Laundering, play a crucial role in setting global standards, assessing country compliance, and promoting cooperation between jurisdictions. The private sector, including banks, financial institutions, and other businesses, must also play their part by implementing robust KYC procedures, monitoring transactions for suspicious activity, and reporting suspicious transactions to authorities. Civil society organizations and investigative journalists play a vital role in raising awareness, exposing wrongdoing, and holding those in power accountable. Combating money laundering is not just a legal or regulatory obligation, it is a moral imperative. By working together, we can disrupt the flow of illicit funds, strengthen the integrity of the global financial system, and create a more just and equitable world for all. Section 1. Global Guardians, the front line against financial crime. In the face of increasingly sophisticated money laundering operations, a global network of organizations and individuals is fighting back, working tirelessly to safeguard the integrity of the financial system and bring criminals to justice. These modern-day financial warriors, armed with a combination of legal authority, investigative prowess, and technological savvy, are engaged in a constant battle against the forces of financial crime. At the forefront of this global effort is the Financial Action Task Force on Money Laundering, an intergovernmental organization that sets international standards for combating money laundering and terrorist financing. FATF's recommendations, adopted by over 200 countries and jurisdictions, provide a framework for countries to develop and implement effective anti-money laundering measures. Complementing FATF's work are regional and national organizations dedicated to investigating and prosecuting financial crimes. Europol, the European Union's law enforcement agency, facilitates cross-border cooperation among member states in combating money laundering, terrorism, and other serious crimes. The United Nations Office on Drugs and Crime provides technical assistance to countries around the world in strengthening their anti-money laundering regimes. In the United States, the Financial Crimes Enforcement Network, a bureau of the Treasury Department, plays a crucial role in safeguarding the financial system from illicit use. FinCEN collects and analyzes financial intelligence, issues regulations, and works with domestic and international partners to combat money laundering and other financial crimes. Section 2, Leaks and Whistleblowers, Shining Light into the Shadows. While official institutions play a vital role in combating money laundering, leaks and whistleblowers often provide the spark that ignites major investigations and exposes the hidden world of financial crime. These courageous individuals, often acting at great personal risk, shine a light into the darkest corners of the financial system, revealing the secrets that some would rather keep hidden. The Panama Papers, a massive leak of financial files in 2016, exposed a network of more than 200,000 tax havens involving high-net-worth individuals, public officials, and corporations from around the world. The leak, obtained by the German newspaper Süddeutsche Zeitung and shared with the International Consortium of Investigative Journalists, sparked global outrage and led to numerous investigations and prosecutions. The Paradise Papers, another major leak in 2017, revealed the offshore financial dealings of some of the world's wealthiest individuals and corporations, including Queen Elizabeth II, Apple, and Nike. The leak, again obtained by Süddeutsche Zeitung and shared with ICIJ, highlighted the pervasive use of tax havens to minimize tax liabilities and shield wealth from public scrutiny. Whistleblowers, individuals who come forward with information about illegal or unethical activities within their organizations, play an equally important role in exposing financial crime. These individuals often face retaliation from their employers or even legal action, making their willingness to speak out all the more courageous. Section 3. The ongoing battle: technology versus transparency. The fight against money laundering is a constant game of cat and mouse as criminals constantly adapt their tactics in response to new regulations and law enforcement efforts. The rapid pace of technological innovation, while creating new opportunities for economic growth, also presents significant challenges to those tasked with safeguarding the financial system. Cryptocurrencies, with their decentralized nature and pseudonymous transactions, have become a favored tool for money launderers seeking to move funds anonymously and across borders. The proliferation of online platforms, from e-commerce marketplaces to online gaming sites, has created new avenues for criminals to cleanse their illicit proceeds. Law enforcement agencies and regulators are working diligently to develop new tools and techniques to combat money laundering in the digital age. This includes investing in advanced data analytics, enhancing information sharing between jurisdictions, and collaborating with the private sector to develop innovative solutions. However, the fight against money laundering cannot come at the expense of individual privacy and civil liberties. Striking a balance between security and freedom is essential to ensure that efforts to combat financial crime do not undermine the very values they seek to protect. Section 1. The Pervasive Stain. Money laundering, once relegated to the shadowy corners of organized crime, has permeated the very fabric of our globalized society. It courses through the veins of the financial system, leaving its insidious mark on every transaction, every investment, and every aspect of our interconnected world. From the seemingly innocuous purchase of a cup of coffee to the multi-billion-dollar deals struck in the towers of high finance, the taint of dirty money is ever present. It hides behind shell corporations, offshore accounts, and complex financial instruments, masking its true origins and perpetuating a cycle of crime, corruption, and inequality. No country, no industry, and no individual is immune to the corrosive effects of money laundering. It undermines the rule of law, erodes trust in institutions, and fuels a shadow economy that operates outside the bounds of legitimate commerce. The fight against money laundering is not a battle that can be won overnight. It requires a sustained and coordinated effort from governments, law enforcement agencies, financial institutions, and individuals around the world. It demands vigilance, innovation, and an unwavering commitment to transparency and accountability. Section 2. A call to action. In an era defined by unprecedented financial flows and technological advancements, the responsibility to combat money laundering rests on all of us. We must become more discerning consumers, more responsible investors, and more engaged citizens, demanding transparency and accountability from those who manage our money and govern our institutions. Education is paramount. By understanding the mechanics of money laundering, the methods employed by criminals, and the red flags that should raise suspicion, we can become more effective guardians of the financial system. We must be willing to ask questions, challenge the status quo, and report suspicious activity to the appropriate authorities. The fight against money laundering is not just about catching criminals, it is about safeguarding the integrity of our financial systems, protecting our economies from destabilization, and upholding the rule of law. It is a fight for a more just and equitable world, where the proceeds of crime cannot find refuge, and where the corrupt are held accountable for their actions. The path forward is clear. By embracing transparency, demanding accountability, and working together, we can create a world where dirty money has nowhere to hide. The future of our financial systems and indeed our global society depends on it.